What up, guys, and welcome to the coffee shop. This is your host and Baristo, and let's maybe do this video without this giant thing in front of me. How about that? There we go. What's up, everybody? This is your host and Baristo, and I hope everybody has been joining the website right there, coffeeshopcrypto.net. There's a lot of activity going on, and somebody came up with a really good idea on a way to combine two of the indicators that have been released. One was the coffee break, and the other one was the free version of the Heikin-Ashi algo that has just recently been released. I am really happy with the way that this guy combined the indicators. I did the same thing on my chart. You could see it right here. I'll show you what I did real quick. But in today's video, what I want to do is I want to give you a price action analysis breakdown of what I'm looking for on Bitcoin before I get into any more buy positions, or what I think you guys should look for anytime. You don't have to follow my advice on this. I'm just saying that this is what I look for. Maybe it'll help you guys understand what you should be looking for when you are developing a strategy. And I came up with this video idea simply because of one thing. Okay. And I got to put this up here, okay? A strategy is not a set of indicators, okay? Now, all too often, I see people, they're looking at, things on TradingView, and they load an indicator on their chart, and they say, hey, this strategy doesn't work. Okay, let me be clear about something. You can put an indicator on your chart. That doesn't make it a strategy. An indicator is not a strategy. A strategy is when price action shows you something, you confirm it with an indicator and you make a particular decision. If price action makes another move and you are already in your position, then you develop a plan B. Okay, a strategy is a plan of what do you do when X happens. That's all a strategy is. And I do not want you guys to get that mixed up. An indicator is strategy. A strategy is not an indicator. And I'm going to show you what a strategy is, because I developed one of what I would like to do for Bitcoin in the next coming hours, let's say, right? So let's get this off the screen. What I did here was I put these two lines on the chart, and they're simply based off of one thing. Right now I'm looking at a 1 hour chart on Bitcoin. And what I did was I started with a 4 hour chart on Bitcoin, and I wanted to analyze, like, where is my lowest high, my highest low, right? This is something I'm looking for. And I did this on a 4 hour chart, okay? And I just kind of took it off of what's happening here in current price action, everything from February 9th all the way to now, between the 9th, the last 2 days, okay? But once I developed, like, where do I think my range is that we're in, because you're always in some kind of a range, right? Again, this is a 4 hour chart. I then looked all the way to the left. I don't have to go there now because it's really far. I looked all the way to the left for previous price action of Bitcoin at this price level. And I wanted to see, is there any confirmation of these levels, right? I just drew lines instead of drawing a zone for now, okay? Because I want to see a price point. So I looked left, I compared it to where I am here, and I made my slight adjustment. Okay, I was looking for any fair value gaps that have not been mitigated. I was looking for previous points of very strong price action reversals, things like that. Okay, and you'll know it when you see it. I don't have to get into the details of what you're looking for, because what you're looking for is determined by what your bias is. Okay, but me, I'm being cautious. I'm setting two positions. I'm going to be setting the condition for a buy and the condition for a short hedge. Okay, a short hedge, because I have positions on Bitcoin right now and I don't want them to lose too much of their value. Short hedging is when the price starts to fall and move the wrong way. You start taking some of your assets and you short sell them so you could make money on the way down. Now, we'll get into that on another video. What is shorting and how do you do it? Now, let's get into the strategy. I dropped from the 4 hour down to the 1 hour time frame, okay? And I have these levels drawn out, and I just put little, labels like, what is this? What happens at this level? What happens at this level? Okay. And what I'm doing here is I'm basically looking for true price action. What was the start and end of a move? I'm looking for swing points and stuff like that, right? So combining things with the RSI, I can see whether I have true highs and lows and stuff like that, right? So Using the RSI, I can see the actual low of this move. Okay, so the start of the move is actually down here. Okay, and currently, let's say previously, right, the end of the move would have been here. This would have been the end of the move, right? That close or this high would have been the end of the move, not this one. This ends up being the end of the high. Why? Because it has a high and a higher close. Okay, this has a high, but it's a lower close than the other one. So I want this, right? So if you were getting into price action trading and setting, limit orders for when price is going to get to another level, these candles would not be here yet. Okay, you would have this high and this high close, and then price starts to dip down. What you'd end up doing is you would end up putting a buy order at that level, and price would eventually trigger it and go up into your next take profit. Now, you can always use a Fibonacci, right? Find your low close, find that point right there where it actually triggered, and you take that and you say, okay, I'm going to go up to a Fibonacci level. I'm going to safe bet it right there, right? And then if it pulls back, okay, I'm going to wait until, see what happens at this point 382. And that's a way to develop a strategy. That's a strategy, okay? The strategy was I looked for my high, my order was triggered, and I'm going to set a take profit based off of this trigger, right? So you got your low, right? You're triggered here, okay? And you're going to get out at this point. It doesn't mean a price shot up all the way over there in one shot. Even if it did and it started pulling back and the next candle formed, okay, then you're still likely to end up getting triggered right here, okay? So on the next candle. Now, the strategy that I'm developing here is basically this, right? I wanted to find the highs and lows, the true highs and lows, right? This, you can see the RSI made a high here and a lower high here. So this is the high that I'm looking for right there. Okay, this, right, would be a divergence high. Okay, I haven't reached this level yet. Okay, so once price comes back down to this level, this is where I'm really going to start considering to get out of trades. Okay, and I don't want to leave this on a chart, this one on a chart. I just want to show you something. A lot of people are going to say, hey, what's going to happen, inside this zone? Well, inside this zone, what I can do is I can go down to a much lower time frame, let's say 5 minute, and I can start scalping in both directions, right? Here's what you would do for that. Here's the strategy for this. Simply take a box, right? Do this, draw a box, okay? And you want to find the midway of this zone, okay? Now, put a midline, do that, there you go. So now, the middle of the zone is where you would stop. You would sell from the top down to the middle, buy from the bottom to the top. Now, you don't do this on a 1 hour time frame. You drop down to a 5 minute, let's say, okay? And you do that. That's what you're looking for, okay? So right now, you'd still be in a sell position, okay? You'd still be in a sell position. I'd be taking these sells every time I drop below liquidity, right? Drop below liquidity. I'm dropping down, and I'll take a sell position, but I won't buy it back until I get down here. So I drop below, right? I drop below. I've cleared with a lower low and lower highs, and I set a sell position here. My target is here. The RSI pulls back up, drops back down again. I'm below this ribbon. There's this little blue line that's showing on my version of the Heikin-Ashi algo. I've dropped below that as well. So here's another sell position. So in my case, that means I've put a sell order in here. I've put a sell order in here. Okay. I sold at these two places. I haven't bought anything back. I'm expecting to buy back my shares when it gets down to this level. Now, what is significant about this level? Okay. Well, if you just look left, all right, this is a midway point. Okay. And you just find a fair value gap that exists somewhere in this space. And right now I see one. There's the bottom of it. That's the bottom of that fair value gap. So now I have what's going to be known as a bit of a resistance area inside of this zone. So this is a very cautious place. If price starts getting down here, I want to stop all the way down here, and I don't want to do anything at this point. Why is that? Because a fair value gap can trigger orders to just run right back the other way. Okay. So again, this is a strategy, right? So let's go back to the 1 hour. Let me wipe this box out. And I'll show you a little bit more about why I'm developing the strategy this way. Okay. Here, that's out, That's out. Let's get rid of this. Now, what you need to do is you need to make an assessment. You have to watch these candles. Just look at how they're forming. And of course, I created a bit of a cheat code for myself. And I'm going to show you something that you can look for right here on the algo to tell you that the bullish orders are diminishing and that they're selling off, and that the bearish orders are triggering and people are actually. So there's a difference between bullish orders that are selling off and bearish orders that are being collected. Okay, there's a difference between the two. Just because there's a bearish order doesn't mean somebody's actually taking that order, right? So let me put in my little cheat code here, right? So it's the massive range monster. And the only thing I have turned on here is that it's going to be showing me high time frame candles, right? Let's do this. Okay. So what this is doing right now is I have it set for the daily candle, okay? And you can set it for, not you can, but I can, and eventually you guys will be able to too as well. You'll be able to set this high time frame candle to look at however many bars that you want to. I'm on a 1 hour time frame. It's looking at 24 candles. So it's taking all of these candles. Let's see here. There we go. It's taking all of these candles and it's giving me one candle in the structure of what all of those candles are equal to, right? So if I were to go to a daily time frame, I would just see this. But since I'm on a 1 hour time frame, it's taking 24 candles and it's drawing out this shape, right? And this shape means we have a lot of resistance here and support here. And this is the daily range, okay? And if you remember, when I drew out where my dangerous area is of this particular zone, it's essentially the same thing up here. That's going to be the fair value gap that exists in the lower part of this candle, right? And that's the same thing that's going to be existing in the lower part of the current candle. So let's pull this out. Now, that also means that my actual swing high is not this high. This is just a high. It's not a high. This is a high, it's a pivot. But my current, so I'm here in the chart. My current high is actually the high of this candle. It's this one. That's my high, okay? So if I draw this out, you just look what happens, okay? This candle, all of this structure is going to have trouble breaking above this. So this is what I have to assume. I'm going to have trouble getting above this. I don't want to take any buys until I get above a bias that is above this line. So again, this is a strategy. Look for your support and resistance and make your decision based off of what happens when you cross that support and resistance, okay? Now, using something like this means that, for example, here's the close of this daily candle, which means we have all of this as resistance. And here's this, which means we have all of this as support. Now, I do like targeting fair value gaps, and I understand very well that you guys are going to ask about that. When price gets below, grab this thing here. When price gets below, right, this level, you see I have conditional sells, right? So basically what I'm going to do is I'm only going to sell if there is a fair value gap on the other side of a pivot. Okay, so let me turn this off. Here you see you have a swing low. You can call it a pivot. It's not a true one, but I want to see if there's a fair value gap that exists on the other side of this, and it needs to be above support. So here we have support, right? You got support. And the fair value gap, most of you can see it. Some of you can't. That's fine. The fair value gap is right here. It's a small one. There's a fair value gap right there, which means there's orders left in this space that can trigger movement. So now this means I have support below a fair value gap that is below a pivot. So this would be my first target. I would sell, short sell, directly to that zone, right to the middle of the zone, top of the zone, whatever you want to use. Now, if there was no pivot, I would not use that fair value gap. And there is one back here, okay? So for example, here you have a pivot. That's a swing low. This low is lower than this one, right? And it's lower than all of these. It's lower than the previous one. So this is a swing low. The problem is that here, there is no fair value gap in this space. This is the next swing low, and the fair value gap is down here. Now, like I said, I want to see in this level. Let's turn this off. There. So first I want to see an area that is a fair value gap, okay? And then below that, I want to see support, right? And in between these two, and above the fair value gap, I want to see a pivot. Now this is if I'm doing a short sell, okay? This is only if I'm doing a short. I'll do this, right? And I'll just say like that. Nope, hang on. Let's make it easy for you guys to see. Do a call out and there we go. My short sell structure. Okay, and maybe we just give the text a white color. Now you can actually see it. Now, again, if I'm selling, right? If I'm doing a sell, I don't have to wait to break the pivot. I just need to be in a good position, right? Let's get rid of this. If I'm selling, I want to see that there is a pivot with a fair value gap underneath it. Why is that? Because a fair value gap is very attractive to price. It's pulling price back towards it, okay? That means the pivot will most likely be broken, all right? Now, once you get down to that pivot, you can wait till you break it and then target the fair value gap. Or you can target that specific pivot only because it has a fair value gap right next to it. Otherwise, if there was no, right, if there was no pivot, if it's not there, then there's nothing that really attracts that fair value gap, okay? So put this back here. Now, you don't really want to get down to support. You don't want to target that. You want to target the gap and wait for prices. You're out of your trade at that point. You want to wait for price to get down to support, and then you decide what to do next. Where is your next target? Okay, was the fair value gap mitigated all the way? On the way down to the pivot, did it create a new pivot? Did it create a new swing low to get down here, right? Because price will do this, right? It'll do something like that sometimes. Get down to the fair value gap and do this, right? And then what do you have? You have another, let's just use this, right? What you have is another fair value gap, okay? As price was coming down to target your fair value gap, the previous one, it made another one, right? And then it started moving back up and doing whatever it needs to do, right? If it made another fair value gap, then okay, then you can target that one on the way back up. So here we go. This and this, we don't need this, a lot of stuff on the chart. So that is what developing a strategy truly is. Now you guys put indicators on your charts, and I know that you like using fair value gaps, you like using pivots, but you need to know how the combination of the two generally works together. Now let's take a look at the algo, and I'm going to show you something. What you can see here, okay, is the liquidity ribbon, right? And I want to point out something for you. This is the bottom of the bullish liquidity, the top of the bullish liquidity, and the control line is currently in control is the bulls, right? So that means I'm only going to draw this out here. You know what? Let's use for all the drawings. I don't really need them here. There we go. So this area and only this area is where the bulls are in control. That's it. They're only in control here. Now you can see that it's still green to this point, but they are not in control at this point. What I want you to see is this, okay? You see how this bullish color is rising on the bottom? That means sell-offs are taking place, okay? That simply means that the orders are just being sold, but they are not necessarily bearish orders, right? That's not what that is. So this is just the loss of bullish momentum, and then you can see this starts to catch up to it, right? So that means here is where your bullish orders are strong. And if you move this over to the bear side, here we go. Oop, I can't grab that, huh? You'll see that this is where they were strong, and this is where they stopped, okay? And this is where the changeover takes place, because at this point, the bearish orders start to slope back down, right? Then it's not until this point that the bulls actually start getting in. They're like, here, price is in a good place here, and they've actually stopped. They've stopped pressing. So we're going to start taking over. And that's exactly what happens. Right at that point, they start taking over. Same thing here. The bears realize, that the bulls start selling off at this point, right? Just look at the price. Bulls start selling off. And then right here, the bears are nice and solid. The bulls are done. And price just starts curving back down. That's it. So that's how this liquidity ribbon truly, truly works. It's telling you a lot more than are you tapping into bearish or you're tapping into bullish or what's happening. You need to see what is the direction of these lines. So that being said, this is also why I am waiting at this point to enter into another trade, okay? Because I can see that this massive area of resistance is here, and all of this activity was taking place inside of a resistance area, right? As soon as price broke out, you went just another couple of candles and the sell-offs started taking place. So now I'm just waiting, and this new candle is forming, and it's having trouble breaking the mid, which is nice, but it's also having trouble breaking that top section. So it's a clear indication that this good resistance area is still a very strong resistance area. It's going to take a lot to get through there. So what I'm waiting for at this point is I need to know what's going to happen here, right? It's very simple. Not very simple, but you just need to be patient with it. You don't know what price is going to do. Either it's going to dance, right, and do this, right? Or it's going to dance and it's going to get down below that, okay? So you come over here, right? When it gets down here, that's when you start looking for the fair value gaps, okay? Not here because there's no true pivot. Here. There we go. Fair value gap right here. Target zone. And you would just take this down to that zone. So this is a strategy, all right? You don't just get in because an indicator tells you to get in. You have to watch the indicator and understand what it's telling you. Again, I'm going to show you this one more time right here, right? Nope, not that. I want you to see what the algo is telling you. See, the slope up right here means that you are green, that you are bullish, but it's a bullish sell-off, okay? This is where the bulls are strong. It's nice and flat. This is where the bears are strong. It's nice and flat. This is where the bears are really strong. So when they tap into this, it's a nice strong order, and they would have to get below. The bears would need to get below that control line, but they never do. Instead, it breaks back above at the same time that they start losing their momentum. And so there you go. Long video, but that's all right. I hope you watch the whole thing. You do not want to miss any part of this. Very, very, very key. So if you want to get your copy of the coffee break and the Heikin-Ashi algo, I have the premium on here because it has extra things, but you can still get the same results by combining the Heikin-Ashi algo free version and the coffee break. Go to coffeeshopcrypto.net, get your hands on the coffee break and get your hands on the algo, and just kind of put them together. There's also a video that I'm going to do from another member who said that what they did was they took the Heikin-Ashi algo and they combined it with Stochastic, the latest version of the Stochastic that I created. I'm going to put that on the website tonight so you guys can get a quick access to that one too. Peace out, everybody. Thanks for coming through to the coffee shop.